London and Toronto listed Canadian Overseas Petroleum, which has operations focused in Wyoming, the US. It's announced what it says is a significant increase to its proved or 1P reserves. The chief executive is Arthur Millholland, and he joins us now on the line. Arthur, welcome. We've spoken before about this and your expectations, and this I know is centered a little bit around this recent deal you've undertaken. Explain more about how you've come up with this announcement today.
Well, essentially, most people that follow our stock know that we had a bankrupt partner by the name of Cuda Energy, and they were formally put into bankruptcy in November of last year. And to go through the process that they have hire a receiver, and the creditors put a receiver in. Now, all the assets that we bought of Cuda's U.S. assets are complementary to our own. They had a non-operated interest, and we had to we're carrying them from April of last year to up and through, even continuing through the bankruptcy process. And we negotiated a very commercially attractive transaction for us with the receiver. Which was accepted in April and accepted by the courts both in Canada and the United States, because Cuda was a Canadian company, but with a U.S. affiliate. And as you can see in the press release, we did it under extremely attractive terms. That on a 2P basis, we purchased it for $2.20 a barrel, and with the valuation on the proved and probable at $15.70 based on the discounted net present value on July the 31st. So now our hands are untied, because a lot of the things that we did having to do throughout since we acquired the original business in March of 2021, we don't have to carry a bankrupt partner. But most importantly is that we funded the purchase of Atomic with a loan from a credit fund in March of 2021. And our objective, as I stated earlier in the year, is to refinance that loan with a reserves-based lending facility with a commercial bank. And so this actually reserves report, including the Cuda interest, at the end of the period after we closed it, which has to be done. So in this case, we closed it on the 25th of July. It's as at the 31st of July. So the reserves, and you can see it on the 1P, Cuda had a 47% interest, 47% of our interest in the assets, and that's essentially what it said. We grew the 1P reserves by 47%. So no surprise.
Okay, so let me just kick in there with a very straightforward question about what this means to the bottom line for the investor in the stock of COPL.
Well, it's really quite straightforward. In the press release, and under Canadian rules, that if I publish reserve numbers, which were signed off by Ryder Scott yesterday, and in a press release, then I have to state essentially what the definitions mean. Okay, and so for the average investor, I would encourage to read the definitions that are in this. And so in reserves evaluations under Canadian regulations are much more stringent than they are here in the UK, and that's a function of scandals that happened in Canada, both in the oil and gas and the mining industry about 25 years ago. So the definition of proved reserves, which is in here, says proved reserves are those reserves that can be estimated with a high degree of certainty to be recoverable. There is a 90% probability that the actual remaining quantities recovered will exceed the estimated proved reserves. Now, for the UK investor, that doesn't sound like it's important, but it's extremely important, because what they're used to seeing here are P10, P50, P90, and a P90 in the UK and other places in the world there's a 90% probability that you will recover up to those volumes. Okay, all right. So what the investor, and this is an independent report. It's not an audit of our work. They have all the data, and they do their own assessment. Is that in fact is that this is a number that the on the proven reserves that the investor can very much rely on. The second thing is that we're out, and we've made it no secret. We said at the beginning of the year we had a number of objectives to do this year. One of them was to acquire CUDA. We've done that. The next one was to refinance our senior credit facility with our US-based credit fund, which is a very expensive piece of paper. But in March of 2021, we got a term sheet actually for that loan in January of 2021, when nobody was able to borrow any money for oil and gas assets. But we did, and that's a function of this asset that's high quality. So for us to go to a commercial bank for an RBL, we needed this document with the CUDA assets in it. But commercial bank lending on reserves-based lending is focused on the proven reserves, okay? And so we have proven producing reserves and proven undeveloped reserves. And on our website, there is a presentation that was put up late yesterday in Canada that essentially puts the tables from summary tables from the reserve report from December the 31st and July the 31st, so they can see that. So our pitch to the commercial banks is this, that at July the 31st, the proven producing reserves had a value of $170 million. But the total proved value is 254. So one of our objectives is to push the proven undeveloped into proven producing. In other words, to increase the value or the loan value of the company over time, and would expand a facility that we're going to pitch to them.
Okay, let me just put this into some sort of context. The numbers you're talking about there: London listed stock market capitalization £53.5 million. Let me just bring up a share price chart.
It's not £53.5 million. It's £53.5 million Canadian dollars.
Beg your pardon. Sorry, correction. Thank you.
In effect, our market cap is about 40 million and change US dollars. Right. Okay. And our if you want to look at our enterprise value, so our debt is about 45. The face value of this convertible bond we did is about 25. And if you add in 40, call it 45, or that our enterprise value is around $110 million US as of yesterday. So today it's about 115. Sure. So if you look at the total proved, okay, that it's saying is that its value is 250 million. And that's not the probable, and the probables in Canada are by the regulator, if people want to choose to read the handbook, is that they're determined to be the best case, like in other words, by the definition. So a lot of our probable reserves are, not all of them, but a good part of them are in recovery factor on the miscible flood over time. And the others are related to Coal Creek, around the frontier reservoirs in the Dakota there, which are proved producing and proven undeveloped. So the investor should look at that and just say, where should the share price be? Is that given where crude oil prices, and I haven't read any analyst globally that saying crude oil prices are going to collapse here. In fact, the other way is that the company is extremely undervalued.
Yeah. Let me just bring up a share price chart, because I think it's worth looking at this in the context. As again, it's what we've been talking about. And my apologies, I got the currency wrong. You're right, it's Canadian dollars we're talking about in terms of market value. I was talking about there, but the Canadian Overseas Petroleum the share price you can pick up on this, currently trading at 16.25 pence. Now, this doesn't bear too much resemblance to a company that you're describing, which has all these reserves. One, I think it's worth asking you the question, why is it so undervalued? And two, I want to get onto this low point that we've seen recently, because it has had a significance so far as your relationship with the company in terms of buying shares. But before we get onto your share purchase, why have the shares been beaten up so much? Was the company originally concerned, or were investors concerned about the amount of money you'd have to spend, which now seems like you've now got over that problem? If that is not an issue, what is an issue for investors? And they see this stock down at 16.25 pence.
Yeah, well, that's actually a good question, and that's a question that has caused me and others to really rack our brains about. Now, the first thing that if you read social media is that we have retail investors that opinion is that every time we issue shares that it's dilution. And so the key thing about dilution is it's only dilution if you don't create any value. So here, in fact, is we can see that the net present value of our 1P reserves we acquired from CUDA is 99 of the assets of the company at 93% higher than it was last year. On a 2P basis, and this is the discounted net future revenue. Okay, so after all capital's put in and everything else, it's at 90, call it 91%. And so, so you need to say, fear of dilution is if dilution was, you're not creating any value, then what we've done is we've actually gone out and created value. So maybe there's, in the opinion, there's a misunderstanding of how the market works. And I've been in this public company game since 1993. I actually look at the market, and I also look at trading patterns. So that could be part of it. But there's another issue that we have seen, and we have pointed it out to the regulators here, is that we have an extremely liquid stock. And if you want to go out and buy or sell a share, then it's really easy to do. So in other words, there are a lot of public companies that trade by appointment. We don't trade by appointment. No. But that leads it just allow me to finish. That leads itself to a lot of other things that can go on. And one of our more than suspicions is that here in the UK, in difference to both in North America, either Canada and the United States, that allows spread betting, and which is illegal in North America. And so it's essentially a tax-free structure on the gains. But if you look at the odds, the probability of getting a return on a spread bet is much greater on a short than a long. And so, like today's trading, for example, didn't surprise me one bit at all, because there are a group of traders that we know that do this. And so their essentially trading model is to cause the stock to trade in a box. And it's frustrating from my standpoint, but we know it's there. And in fact, we've mapped many trends of it over trading periods and sent it to the regulators. And they, believe it or not, know it's an issue too. Not all stocks, so just very liquid stocks over here. So, it's like being in a thunderstorm and trying to yell over thunder. There's certain things that we can do, and the business is sound, and eventually it will stop. And it's frustrating, but you also notice that when you get in these periods of trading negativity, there's an awful lot of negativity on social media, and it's concerted, and it comes up, and a lot of our investors are unsophisticated, and so when you get a social media storm at you, you tend to say, well, maybe they know something that I don't. And so what's happened here, after I went out in the market and bought 1 million shares, and by the way, I have very small windows that I can buy stock in, and this one was about 3 or 4 days. Now, I had no idea what was in this report till I received it on Friday, but I can, you can sort of estimate, where things are, but I had no idea what was in it. And in fact, as I was quite pleased with the numbers when I saw them, is that, but I also know we're moving into discussions with banks and things I said on August the 15th that we're going through the field, treating our wells. We have a pretty good idea. We've torn apart the whole field technically internally. Here recently, we know we have wax issues well below where anybody ever thought they'd be, but we got a treatment regimen for them. Unfortunately, services are tight in the oil business in the continental U.S. because of people, let go during the pandemic. So, we're doing our best to move those along, and we're getting good results. And so later in the month, I'll update people because I promised I would, when we see in August where things are.
Yeah, let me just quickly bring up a share price chart just to explain what's going on here in the context of what you've just been saying. I just want to show this this drop that we had here, and I know that you bought shares right at the very bottom here, which is obviously very astute, and you said you've got a very small window and you were not in receipt of any other information. Clearly that is something which is obviously critical. So you benefited from upside from where you initiated that share purchase. You were already a share owner, let's say. So you bought your million shares. I think they were in two tranches, weren't they? 100,000 and 900,000. What's your anticipated return on your investment at that level? Obviously, you're a long-term investor, so you're going to see a long-term return. But did you see much upside in the share price you bought at personally for your own investment?
Well, absolutely. I run the business, as I said, and I'm an oilman. I know exactly what we have and where it's going to be. And so, I purchased the shares is that, we thought we actually put good news out on our end of the quarter on the 16th of August, and the market didn't like that. So I said, okay, I'll go buy some stock. And I've got people say you should go out and buy some stock. And I say, I'm limited in times of the year when I can buy it. Like, for example, we report quarterly. I can't buy any stock within 30 days of your reporting period. I also, for quarterlies, 90 days before our year end. And then, of course, I'm also subject to various, things that knowledgeable of what's going on in the business. And so if we're close to having hard results, then again, I'm restricted from buying. So my view is that, hey, look, I can take the numbers that we put out today and tell you my expectations of our share price should be around 50p plus a share based upon what we put out today. But they've always been that way. And so it's, the markets are what they are, and they will eventually cure themselves. It's what it is. But we've got lots of good things. We're executing our plan, and things are coming together. But at the same time is that I would take this as extraordinarily good news.
Yeah. Arthur, we'll have to leave it there, but thanks indeed for joining us. It's a pleasure to be able to catch up with you, and good luck with that. We look forward to speaking to you later on in the year when you get some more information come through. But in the meantime, good luck, and thank you indeed for your time. That is Arthur Millholland. He's the President and Chief Executive of Canadian Overseas Petroleum, and you've been joining us here on an IG Investments interview. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.